Good morning, everybody. Today's date is November 20th, 2024. It is currently 8:51 a.m. All right. What I like to do every single time I start off my hours of operation, I like to read my pre-checklist. This is my trading pre-checklist. Okay. It has all of my rules and really just the standards that I have to uphold. So whenever I am forgetting a step, I simply just grab my checklist and make sure that I'm following step by step with my trading strategy. That's it. That's the only purpose that this has. I would recommend you printing off your trading strategy on a piece of paper, laminating it, and keeping it next to your computer so that way you can ensure that you hold yourself accountable to your own strategy. Because as much as anybody knows in this world, the only person that's holding you accountable is you. All right. So the acronym that I decided to use to help memorize my trading strategy is WGTA. So what I like to do is I have my pre-checklist and I am in the process of committing this to memory. I have finally fine-tuned my trading strategy. This is the second week of me finally actively trading the same setup, same strategy, day after day. All right. And I can tell you some great insights about my strategy, which are, I know a lot of people like to get into trades very often and whatnot. With my strategy, I've kind of found an average of maybe 3 to 4 setups a week that show up. So that's pretty solid. That's good information to know. Well, anyways, without further ado, let's go ahead and start off by reading my pre-checklist. So WGTA. First phase, what separates me from other traders is my willingness to wait, even if it means missing the setup. There are 8 steps in this phase. The first one is to identify market direction. The second one is to identify 4 points. After, we mark a trend line to COB, which is close of business. Set up dollar box. Spot potential entries. Confirm point by definition. Place stop at high or low of point. Wait for price to enter buy zone. All right, the second phase. I announce, grateful for spotting this entry, let's execute. There are 3 steps in this phase. First one, enter 5 contracts at the close of the 5-minute candle. I have 5 seconds to enter. Move entry horizontal line to the close of the entry candle and label stop loss, target price, and entry. The third phase, I announce, with trust in my strategy, I remain stoic and execute only when my setup demands it. There are 2 phases or 2 steps in this phase. First one, we got action candles. Second, we got noise candles. What are action candles? Action candles are simply candles that force me, the individual trader, to take action. All right. So we'll go ahead and go over my 3 action candles that I have. So the first action that I have to take is if my stop loss gets hit. First thing I do is close my position and announce, proud to execute where others hesitate. Let's spot another entry. The second action that I can take is after I enter a position, once 1 hour has elapsed from my entry, I close my positions. It's simply a time limit. And then the next is my target price reached. I announce, my unwavering patience and discipline brought me to my target. Now we have the definition of what noise candles are. What are noise candles? These candles are simply market noise, have no assigned meaning, and test your patience, resolve, and integrity. What do I mean by that? Personally, I have not assigned a meaning to those candles. And because I have not, there is no reason to pay attention to those candles. They're simply market noise to me. Finally, the last phase is I announce, amazing, trade is successful, let's see how far we can go. At this point, I only have 1 step. I set a trailing stop loss to maximize gains. And that's it. I don't close a position. If I have 5 contracts in, I don't close 3 contracts and let 2 continue to run. I let all of them continue to run. All right. And if you all wanted to see what trading mindset or my strategy looks like, that's how it looks like. All right. Well, I read this twice a day minimum. and I'm also in the process of working to committing this to memory. All right. So the first thing that I like to do is I like to start off every time I trade with a structured meeting outline. And what I mean is I wrote down on a piece of paper or on a Word document. That was weird. I wrote down on a Word document the flow, in a sense, that I want to go ahead and do this entire video on. So I'm just going to go ahead and start off with the first phase. Let me see if I can show. But anyways, so I'm going to go ahead and start this off. So first, I'm going to go ahead and go over the task condition and standards. So today's task is discussion. Today's discussion focuses on key topics to deepen our understanding of trading philosophy, the observer effect, productive versus non-productive thoughts, and the role of beliefs. The conditions. This session will be conducted in a quiet office space to allow for uninterrupted focus. Please ensure all distractions are minimized to maintain clarity and engagement. The standards. Present ideas clearly and concisely. Stay focused on the topics and avoid tangents. Reflect actively and note key takeaways for improvement. Since I am doing this on my own, I have a note card here and I have multiple others, and I'm simply just going to write down things that I've noticed that I need to improve on throughout this video. All right. Accountability is the second phase of this. The objective is to share personal progress related to the application of these principles in trading and life. I will focus on maintaining integrity and sticking to my trading plan, noticing changes in emotional control or self-awareness, recognizing areas where limiting beliefs may have influenced actions. All right, a quote that I will use that I came up with is, well, for this whole accountability phase, is everything in life is as serious as you're willing to make it. What I mean by that is the amount of energy that I choose to put in to what I do is the exact results that I will get back. Or I guess it's equivalent to the results that I will get back. All right. So here's kind of what I mean by this philosophy as it goes towards trading or fitness. This philosophy drives all areas of my life, from trading to fitness. If I treat trading as a hobby, it will yield hobby level results. But if I treat it with seriousness and discipline, I can achieve extraordinary outcomes. What do I mean by this? Very simple. When I first started trading, I don't know if many others have done the same thing, but personally, this is all me speaking from experience. I realized that when I first started trading, I never really had a plan, but I knew I wanted to understand how it was working, the ins and outs, and everything in between. So I didn't have a mentor. I didn't pay for any courses. I just simply watched YouTube. And in doing so, I understood nothing. And it was just really weird because I didn't understand what a lot of the videos were telling me. They were often saying, you need to find this pattern, this setup, trade this way, trade that way, and whatever you choose to do, just stick with the plan, right? That was pretty much like the meat and potatoes over everything that I was reading and understanding. Well, in January of this year, I decided to 100% dive deep into trading. I decided to do full-time, nothing else matters to me. I started with my account with 5,000. My account is now currently like 2,900, and it's almost at, I think I'm $30 short from 3,000, right? So the way I like to see it is I spent about $1,900 on my education when it comes to trading, which is more of an investment because I'm gonna be profitable soon. My goal was to be profitable by the end of the year. There's still time. Let's see if I can go ahead and do that. All right. So what do I mean by treating this as a hobby level? Well, when I first started, I never really set any structure towards my trading. I never said, these are my trading hours. This is how I will be showing up. And this is how I will be trading. There was absolutely zero structure because I didn't even know how to build structure out of nothing, because you're doing all of this on your own. So eventually, I want to say 3 months ago, I decided to actually write down my hours of operation, where I said, you know what? I don't care. I'm going to show up every day from 6:30 until noon or whatever my hours were. So what I ended up doing is I created my work hours. So now my work hours are from my time. They are from 8:30 to 12 o'clock. I trade 3.5 hours a day. That's it. No more, no less. I also choose to come to work dressed with usually khaki bottoms and some sort of polo. On Fridays, I incorporated my own casual Fridays where I wear jeans and a t-shirt or whatever kind of shirt that I want to wear. Usually a workout shirt because I like the way it breathes and I like to be very comfortable. And yeah, so I decided to start treating my trading like a business, where my office is this room that I'm in. So instead of me having to drive like an hour to work, I simply wake up, do my hygiene, I meditate, and then I come into work. So there's really no difference between anything, right? And on top of that, one of the things that I find most enjoyable is the fact that I'm able to hold myself accountable, that I'm able to put myself in this environment. You know, a lot of people often say showing up is the hardest part. That's it. I just show up. I don't really know everything that I'm doing, but I do know one thing. The more I show up, the better I will be. This is going to be my second video that I end up posting. I don't know what I'm doing, but I know that a lot of people, they usually start their videos when they're successful. The only difference is I'm choosing to start mine before I'm successful, so that a lot of people can go ahead and see the growth and the struggles and everything in between that it takes to get there, and how I personally am overcoming each one of those hurdles. And that's really the premise about this, which is why I'm choosing to take this very serious, because this is what I want to do for the rest of my life. All right. So let's go ahead and start off with my introduction, or let's go ahead and move into introductions. So my name is Joel, and today I will be discussing my core trading philosophy, the observer effect, how to distinguish between productive and non-productive thoughts, and how beliefs shape outcomes in trading and life. These principles have been transformative for me, and I hope they'll inspire you to reflect on your own mindset and strategies. So my trading philosophy. My trading philosophy is trading is not about chasing profits, but about mastering yourself. I believe that everything you learn in one aspect of life is transferable to another aspect of your life. I choose to see trading as reality. And what I mean by that is everything that I learn about trading, I apply in my daily life. So my approach to my trading strategy is probably different from a lot of other people. I remember I was reading this book by Mark Douglas. It was The Disciplined Trader. Yeah, it was The Disciplined Trader, and I believe it was honestly like in the first page when the book actually starts, and it said, don't quote me exactly, but it ended up saying trading is 80% psychological, 20% trade technical analysis. As soon as I read that, I was like, okay, well, I know some technical analysis. Let's see if this is right. I went into trading that day or the next day, and I started trading, and it was outstanding. Actually, I was being consistently profitable for the first time ever, and I was just like, whoa, what's going on? And obviously, I ended up getting humbled, just like many others do. I started to deviate from my strategy that was working. I then started getting into my own head, started taking trades that I shouldn't have been taking, started taking massive loss after massive loss. And I think for a week straight, I was suffering from stupidity. I ended up losing I dropped my account from, I think it was like at 7,000 or something, all the way down to 200 and something dollars in a matter of like 2 weeks. And I remember I was angry, I was upset, I was everything you want to say. And I don't know what it was. I'm going towards my P&L thingy so I could show y'all. And I don't know what it was, but something told me like, hey, stop. Don't place this trade. Don't go all in with your last 200. Because I had told myself that, okay, I had told myself that if I blow this account, then I'm not trading again. And so, boom, I decided to stop. Well, this was the month where everything kind of started going downhill. Let me see if I can find this. I think it was June 2023 is when I started to actually make some dough. Let me go ahead and go like this. Okay. Oh, okay. Is when I started to make some dough. I got some green marks there that were pretty big wins with a little bit of reds, right? I know what you're all thinking, right? But think about it. On the 8th, it was at 223, then 206, 117, 195, 397, 83 cents. And then this is kind of where my losses started to kind of kick in, right? Well, this is where it got even worse, right? Well, I decided that it would be really cool to just be stupid for a while, and my losses started jumping significantly. And in the first week of August, I was pretty much losing $1,000 a day, right? And then I dropped my account down. Well, on the 9th or on the 8th is when I almost YOLO'd my account with my last $200. And then something told me not to. And then I decided, you know what? I'm going to do this right. And I decided to bring my account back up to 5,000. Well, I ended up going from that 9th. I made some dough, 3 days wins. And then I took another huge win. And I think my biggest win was 723 on the 22nd or 23rd. Yep, 22nd. And then afterwards in September not September. When was it? Well, September, I only traded a couple of days. Oh, there we go. I only traded a couple of days and that was that, right? Well, in October is when I decided to start bringing structure into my trading, where I only traded 3 times a week. And that was kind of like the consistency that I was showing up with. Well, afterwards, I ended up saving enough money and I was able to fund my account to 25,000. But I didn't want to mess anything up. I didn't want to blow my account. So I decided, instead of trading the way I do with my 10 contracts, that I would just simply buy 1 contract and trade every day. And in doing that, I learned a lot of lessons. And I decided, after my account went below 25,000, I was no longer able to trade on that account anymore because of the pattern day trading rule. And so afterwards, I was like, whatever, I'll just go ahead and throw the rest of my dough back into my long-term investments. And I'll simply just keep 5,000 of my regular invested or of my regular account before I funded it. I'll just put that 5,000 into a cash account, trade from there. So that's when I started to really apply what I learned in life to my trading, and now I apply what I've learned in trading to my life. It was kind of like that bounce and the cause and effect, but with everything that I was learning. So my approach prioritizes psychology over tools because I realized that it doesn't matter the strategy that you have. It doesn't matter the strategy that you choose to trade. If you can't even follow your own rules, then what's the point about making a strategy? So my strategy is not just about making money. It's about cultivating a thinking methodology. I believe that our trading strategy is the language that we use to understand the market. You don't need fancy setups or multiple monitors. It's about how seriously you treat the process. And the process-driven approach that I use is plan. I set up clear rules and align with my mindset and objectives. Then I execute, stick to my rules regardless of my emotional state. And now at the end of every day, I also review. I reflect on every trade to identify strengths and areas for growth. An example for this is my unwavering patience and discipline brought me to my target. This is a mindset cue that ensures that I remain grounded and focused even in high pressure situations. So I created my checklist, and just like how people with work, they'll build structure around their jobs. So if I worked at a hospital, the hospital would be a place that I need to go every day, non-negotiable. So I will surround all of my other activities around my work. So if I'm not working, then on a day I'm off, I can go hang out with my friends, or I can go watch some sports, or I can go gamble, or I can go play with my dogs, or I can go play some disc golf, or I could go play some actual golf, whatever it is. But the point is that everybody structures their lives around their work, right? It's no different when it comes to trading. Usually people like to structure everything around their trading plan. However, I chose to structure everything around my psychology. So what I decided to do was I created a list of healthy thoughts, because I understood that when it came to trading, that when it comes to trading, you can't think the way you used to think. You have to change your thinking. And the crazy part about it is, in order to change your thinking methodology, you end up becoming a different person. And there's a lot of people that I wouldn't say stubborn, but they just believe that their current thinking methodologies work. Because I mean, think about it. However old they are is how long they've been thinking that same way. So to give up on the way you've been thinking, in a sense, is to kind of say, well, the last 25 years, the last 80 years, or however old you are, has been a waste because I no longer think like that. So in a way, that's why it's like very difficult in order to change the way you think. And on top of that, there are many people who are completely unaware of how they think. They don't even put the time in to process how they think. And so I decided to surround my entire approach around thinking methodologies. So my 4 phases are simply 4 trading mindsets that I like to have. What I decided to do is I wrote down a list of, let's say, 10 thoughts that were healthy, such as, I will obey my rules for my strategy. That's one thought. Another one would be, I will remain confident in my strategy. Boom. Another one is, I will not be emotional during potential downsides. You write that down, and so on and so forth. Whatever thoughts you want to be thinking, you write them down on a piece of paper. And then what I decided to do is I added an extra layer to this where I chose to go to ChatGPT and write down these thoughts. And then I asked ChatGPT, hey, I need you to help me create these thoughts because I want to adopt these new thoughts as my new way of thinking when I'm trading. So ChatGPT did its thing, wrote down different types of ways to write down these sentences. And then I decided to kind of use some of the things that I know about words or psychology or whatever you want to call it, which is certain words or certain emotions that you feel cause physiological changes in the body. One huge example is grateful. When people are in a grateful state, they are more open to new information. So if somebody gave me a present for Christmas and they were like, here you go, Merry Christmas, I would feel very grateful and I would open it up, and whatever it is, I wouldn't even care if I don't like it. I would just be so grateful that somebody gave me something that I would accept the information that was given. And I opened the box and it's a pair of socks. I'm grateful that I got a pair of socks. Somebody could have got me nothing, but yet they chose to give me something. You see, so understanding that certain words actually cause physiological changes in the body, I was like, wow, that means that the meanings that we assign to our words cause physiological changes in our body. Okay, let me use that for my trading. So then I started to use ChatGPT to reword these sayings, and that's why they sound the way that they do. So before I enter a trade, like if I'm just watching the screen, I simply say, what separates me from other traders is my willingness to wait. Why is that so important? Because I'm dividing myself amongst the masses. The masses are not willing to wait. I am. And I'm making it a verbal cue to hold myself accountable. And the more I say it, the more I start to act like it, the more I start to believe it. And when I start to actually be patient and wait, it gives me more evidence showing that I am truly doing what my words are saying. And then the next part is kind of like a way to be, I wouldn't say forgiving, but it's more of a, like how some people will say, well, what happens if you miss the setup? Well, I added that to my entire mindset cue. That's what I like to call these mindset cues. You might want to call it affirmations, thoughts, whatever you want to do. I simply call them trading mindset cues. So by adding at the end, even if it means missing the setup, that kind of tells me, hey, we don't care if we miss the setup because we don't ever want to fall under the trap of FOMO. So since I think these are just ways of thinking, FOMO, I even think FOMO is a way of thinking. It's you thinking you're going to miss out. Or revenge trading, it's you thinking, it's a thinking methodology. It's you thinking that you need to get back at the market. So the problem that a lot of people have is that they don't label these thinking methodologies. And by not labeling them properly, you don't know how to actively counter them. So by understanding that they're all just simply ways of thinking, you could simply say, okay, well, then I'm no longer going to choose to think that way. I'm going to stop thinking the market's going without me. So that's why I created like these mindset cues, so that I used to think that way. I used to say, oh, I got to buy low to sell high because it's going to go up without me and blah, 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 blah. Well, after creating these cues and started saying them repeatedly, they overran my thoughts of FOMO or revenge trading or thoughts of me not knowing what's going on. And now I've replaced all of those negative thoughts with healthy thoughts, such as my trading mindset cues. And another thing that I also wanted to talk about is the observer effect. So the definition that I have is the act of observation collapses infinite possibilities into one reality. Your focus determines your outcomes. And what I mean by that is observing your strategy filters out distractions, creating clarity. What do I mean by that? Well, if what you focus your attention on becomes your reality, if you look at the chart and you don't have a trading strategy, if you just simply see a chart, there's an infinite amount of possibilities. And let me show. Let me move this to my back testing screen because it's bigger. What do I mean by there's an infinite amount of possibilities? Well, there's an infinite amount of possibilities to trade this. I could simply say, well, this is my low, this is my high. Once price engulfs here, I'll go long. That's one way to do it. Or another way to do it would be, oh, well, I'm just going to go ahead and trade trend lines. So, until this breaks, I'm going to go long. And you just enter here going long. And once it breaks, that's another possibility of trading. Or there's another one that says, oh, well, there's a fair value gap over here. So price is going to go up here before it gets rejected. So if it's going to go up anyways, then I'll just go long and wait for it to go up here and then sell here and then go short and then drop it all the way down. Is it like there's just an infinite amount of possibilities that you could possibly be trading. And with the observer effect, it says that once you observe something, that basically becomes reality, right? So by choosing to only observe my trading strategy, I only see one variant, which is my strategy. All other possibilities cease to exist for me because I'm only putting my attention on my strategy. So in a sense, by observing my strategy, which I consider my language to understanding the market, I only see one reality when I'm trading. So I don't think, oh, price is going up, so I got to do this and this. No, I'm simply, is this my pattern? No, then I don't need to think about it anymore. And so by choosing to observe it in that manner, I create my one reality. The second I choose to stop focusing on my strategy and start to think of other strategies, I'm inviting new possibilities into my reality. I'm not saying it's a bad thing, but I'm just saying like that's how I see it. So oh man. So obviously that's my opinion. So the next thing that I'll talk about will be beliefs and adaptability. All right. And this will be the last part before I just kind of jump into my actual trading strategy. So beliefs, I personally, okay, so the definition I have here says beliefs shape actions and adaptable beliefs create resilience and growth. Okay. I personally believe that people act according to their beliefs. If you believe that Santa Claus is watching you to see if you've been naughty or nice, and you want the gifts, you're going to act nice or whatever to get those gifts. If you think that he's already watched you and observed you to be, bad, then you're going to continue to do bad things because you're like, whatever. Well, he already knows I'm bad. I'm just going to continue. Right? Just like somebody sitting down on on a chair. If they go to sit down on a chair, they're acting because they believe that they are tired or they believe that the chair is going to support their weight. So they go over there to the chair to sit down. The belief that the chair will support their weight is the leading action that causes them to sit down. If someone believes in God, they are more prone to attempting to be nice because they believe God is always watching and they want to go to heaven. If somebody believes that no matter what they do, they always get in trouble, then they're just never going to do any good because what's the point? Right? So beliefs directly affect the actions that people take. So if you believe the market has it out for you, well, has it out for you. If you believe that the market is random, market's random. If you believe that there are hedge fund managers that are out to get you and steal your $10, are out to get you and they're gonna steal your $10. So the way you believe these things dictates the reality. So if that's the case, then why not create a belief system that aligns with you, right? So the way I see it is my strategy creates a certain type of variant. So I'm looking for a specific pattern that kind of matches this general like variant, if you will. And that's all I trade. I don't care about all of the other variants that exist because there are an infinite amount of possibilities that I could be trading. I only care about one specific variant. And by understanding that one specific variant, the market will give me feedback. And after it gives me feedback, I can adjust my belief. So my original belief when I started to create my own trading strategy was that price always reverts to the VWAP. I was like, okay, then, well, if that's the case, then I'll always aim for the top, and as I'll draw a trend line. Once the trend line breaks towards the direction of the VWAP, I'll enter my position for short or long, depending on the direction. And once it hits the VWAP, I'll close my position. Well, after doing that, I realized that I was taking on an average about 5 to 7 trades a day. And on top of that, most of them were losers. And whenever I would win, it would just basically break even for the day. At that point, I realized that my belief is not correct. Although it is correct sometimes. And this is like a profession where we can be completely wrong, but yet still make the desired outcomes that we want to achieve. And that's the crazy part. That's why it's very difficult to determine where you're wrong and where you're right. And a lot of people like to describe their P&L as them being right and wrong, when in reality, your P&L has nothing to do with the charts. That's like with people who play blackjack at the casino and they reduce their bets before dealing the next hand or playing the next hand, and then they win and they're like, that's it, I only won because I reduced my bet. It's like, no, you reducing your bet had nothing to do with the cards that came out. In a way, this is the exact same thing. The amount of income that you make has no correlation with the way you're trading. They're just two different things. But because like you could be completely wrong saying, oh, the market moves this way, put your money in and still make a crap ton of money. Just like you could be completely right according to your strategy, put your money in and lose everything. Like that's the phenomenal part about it, which I find amazing and interesting. But anyways, I ended up having some feedback from the market. So I remember I posted this comment on YouTube where I said, oh, my trading strategy is the way that I use to communicate with the market and the market communicates back with me. And somebody was like, oh yeah, well, what does the market tell you? Well, for that instance, with my VWAP example, I found out that price was constantly hitting my stop loss. So what did I do? My girlfriend had an idea. Hey, why don't you just reverse your positions? That's a good idea. And I realized that I went from my trading strategy yielding I think it was like a 68% chance at hitting my stop loss with every trade I take. And I was like, okay, let me just reverse it. And now I have a 68% chance at hitting my target price. The market gives me the information. It's up to me to do with it what I want. And so by having your belief system adaptable, it allows you to be able to make these changes so that way you're not just constantly being beat and refusing to be adaptable. What was it? Charles Darwin said, it is not the strongest who survive or the smartest, but the ones who are the most adaptable. So that's what we need to do. We need to be able to have our beliefs be adaptable so that way we can grow as well. If you can, and my favorite quote about this belief system and accountability is, if you can't even listen to yourself, then why on earth would you listen to anybody else? And this is where you start to build your self-trust. I don't care if you want to lie to other people, but at a minimum, don't lie to yourself. That's it. Otherwise, how do you know what you're really doing if you can't even hold yourself accountable? But anyways, let's go ahead and get this started now. So my trading strategy, we'll go ahead and get this going. So we already got a high of the day. Let me go ahead and fix all this stuff up. All right, here we go. So we got the high of the day. We opened at 590.38, and I move you to 1400. All right, go to 38, lock you in place, make you a little thicker, and choose you green. I like to use my highs as green. So this is not a resistant line. I'm going to make that abundantly clear. This is simply a high that I have marked, and I stretched it all the way to 1400 because at 1400 is my cutoff. So it's kind of a visual representation of how much time I have left. All right. Now we got a low right here. So so I have to find 4 points. Okay. So what classifies as a point? Well, red candles can create lows. So we have this low that was created right here with this red candle. What classifies it as a point is when it either becomes engulfed by a green candle, or let me show you another example. All right. What classifies as a point? Well, if the green candle that created the high is not engulfed by the second candle, then I just simply wait until another candle closes below. So we have this red candle that closed below. Now this identifies as a point. And that's pretty much all I'm doing here. And that's what classifies as a point is just simply a definition that I chose to create for my strategy. You can come up with whatever it is that you want, but that's just the definition that I chose for me. That way I can keep myself consistent by making these points. All right, so we got to close at 585.41. So I'm going to go ahead and go to the settings and ensure that I punch these correctly, lock it in place, and create you red. So as of right now, we obviously see that the market is going down. That's fine. Until price can break above here, according to my strategy, I am only looking for short positions. That's how I align myself with market direction. And before I can even trade at all, I need to find 4 points. That's part of my rules. So every point that I find, how one of my rules say mark trend line to COB, simply mark the high and move this trend line all the way to COB, which is 1400. Do it again. Next, we see another point right here by definition. I like to use that word over and over to ensure that I am finding points by the definition. So we have an open at 16 and we have a close at 23. 23 is higher than 16, so that's the high. What? No, I messed that up. Open at 16. No, close at 43. Open at 41. So 43 is higher. So we'll move this to here. We'll mark you green because we know you're a high, and we'll mark you 43 to ensure that you're good to go. All right. So right now we have 3 points. We need to wait for 4 points. Okay. So according to my mindset or my strategy, I'm not in a trade. So what do I have to do? I have to announce my trading mindset cue. What separates me from other traders is my willingness to wait, even if it means missing a setup. That's it. Why do I say that? To remind me to be patient, to remind me to wait for my setup. That's it. right, so we got another point. So I'll go ahead and mark this. The low was 87. Yep. All right. Get all locked in. All right, cool. That's it. So now that I got my 4 points identified, since I'm still only looking for a short position, until price can break above here, I'm on standby for the next high, and I just have to wait for the definition. Point by definition is like what I like to keep calling it. So I'm just on standby until we get a new high. Point. So closed at 50. This one opened at 52. So 52 becomes our high. Value green. Make sure you say 52. All right. Next, set up dollar box. You up for short positions. And then place the stop at the high or low of the point, since we're doing that. This one opened at 52, so under the settings you should say 52. 52. All right. All right, cool. Now the next phase is I need to get a green candle to close in my buy zone. So I like to use my calculator for this part. So we got 588.52. we subtract the 33 buy zone, which is 19. Actually, hold on. 588, 52 minus 0.33, 588, 19, 588, 19. All right. So I have to have price somewhere between 588, 21. All right. Now we stand by again. All right, so we got another point right here. We have a low, so we'll go ahead and mark that. Opened at 46, so we'll change you to 46, 46. Lock you in place, turn you red for low. Let's move you out the way. All right, now we just gotta wait for another push. so we got another high right here. Opened at 16, closed at 15. So we'll use 16, lock you in place, turn you green, and click 16. 16. Bam. All right. Next step, move dollar box here. And it closed, or it opened at 16. So let's see the settings. 16. 16. Lock you in place, and we just stand by, and we get a green candle to close in there. So we got less than 4 minutes. Another point by definition. Close 82. If this candle can close below 35, got a new high. So we got another point by definition. Close at 60, opened at 60. So we'll just go ahead and do this. Lock you in place, consider you the high, and you are 60. So we will put you as 60. So, all right. Looks like this is going to be the entry that we're looking for because it was pretty close to it. It's 60. Yeah. So we just need a green candle to close into our buy zone. Once the candle closes into our buy zone, we are going to enter a short position. All right. Well, that's it for the day. There was no setup that appeared, and if I continue to wait, it doesn't matter because there's no way I'm going to be able to get a setup by the time 1400 hits. So I'm just going to go ahead and call it for the day. I'll just stand by for the next, 7 minutes, and then that's it. I'm going to go ahead and just review what I did today. And yeah, that's it. Calling it a day. Well, sometimes I get a setup, sometimes I don't. I don't really care. I don't really try to think about anything else besides exactly what I'm looking for. Because when I start to entertain other thoughts, that's when I start to deviate from my plan. So I like to keep myself busy. So if I'm not reading, I'm playing on my phone or watching YouTube videos. Otherwise, you know what they say, idle hands is the devil's playground. So if you just sit there and just keep staring at the chart, then you're going to start to convince yourself to do something. Or you could also just keep watching it if you're, strong enough to not do anything with the chart as well. I know there are people like that as well. I don't believe that there's like a one size fits all for everybody. And I don't believe just because some people are impatient, I don't believe that makes everybody by default impatient. If you're capable of looking at the charts and not taking action, good. I choose to look at the charts. Well, when I first originally started, I chose to continue to look at the chart so that way I can understand my behavioral patterns when I'm trading, which is where I discovered that I allow my thoughts to kind of run wild. And the more you start to entertain one thought, the more you start to actually take action towards that. It's like the same reason why casinos, I know a lot of people hate to, integrate the two, but there's the same. And there's going to be nothing that, in my eyes, that I can see that would define that the casino and the market are different. They're not. they're exactly the same. Because if it wasn't, if trading wasn't a gamble, then you would never lose money in the market. It would always be guaranteed to produce income for you. But because there's the risk of losing it all, by definition, that's your gamble. You are gambling. Granted, you have a edge, if you will, but at the end of the day, if it's not consistently producing income or profits, sometimes you win, sometimes you lose, then it's a gamble by definition. And I think a lot of people like to try to keep them separate because they don't want to admit that trading is gambling. But everything in life, you're gambling, whether you want to admit it or not. From when you get into your vehicle to start driving, you're gambling. You're hoping that you don't even think about it, but at any point in time, another vehicle could come crashing down and just completely ruin it. You're risking your life every day just driving. You're gambling every day with just driving to work. You're gambling every day chasing your dreams. You're gambling every day taking no action towards your future. You are gambling because nothing is guaranteed. And when I decided to start kind of understanding that they go hand in hand, I started to use some of my insights from gambling to trading. And what I realized is there's really no difference. The only thing you have control over in both aspects is your risk and how you choose to handle the risk. And at the end of the day, your trading strategy is just for the individual to be consistent, to find consistent entries in a random environment. Like all of these candles moving up and down, completely random. Literally, there's no way for me to know how low it'll go or how high it'll go. And I have no way of understanding when other traders are going to enter the positions that they enter that cause the market to help moving up or down. I have no insights about any of that stuff. And on top of that, ask yourself this: am I a consistent trader? Can you follow your own plan consistently? Right? Now, multiply that by however many participants are in the market. Out of those people who enter the market, how many of them are consistent? See what I mean? On a constant basis, most traders act emotionally. So there is no consistency when it comes to entries, making it even more random because people act on emotions. Just like how some people get angry and they'll just put a position in because they're mad, or people get scared and they'll close their positions because they get scared. That's emotional. There's no consistency about that. So I can't tell if I'm looking at somebody if they're angry. I can't tell if they're sad. I can't tell if they're happy. I can't tell, so on and so forth, right? Yeah, you have body language, but I don't understand what makes the other person tick. So because it's impossible to be in the minds of all other traders, it's random to me because I have no insights in that information. If I had all of that information, it wouldn't be random. But it's impossible for me specifically to get that information and consistently have it updated every second, because every second an emotional state can just change from happy to sad. You see what I mean? So it's random. The market fluctuation, how it moves up and down, random. That's why every day the charts are completely different. That's it. That's why I specifically only look for one pattern, and that's all I care about. And think about it this way. If you ever went to the casino and you looked at the roulette table, you know how they have the numbers on top of the table? They'll just say, oh, this number's hot, this number's cold, this many numbers have been hitting consistently, this many numbers have been hitting never all day. And some people will look at the board and say, oh, number 8 is due because it hasn't hit all day. It's not due. There's still the same probability for that number to hit every single time. Just because it hasn't hit 1,000 times in a row doesn't mean that the 1,000th time in one it's going to hit. No, it's not due. It still has its own percentage chance of landing. And that's it. And the reason why the casinos put that information out there is because they know that by giving the players more information, it sways the individual and prevents them, and it aids the casino by forcing the players to view different points that cause them to go against their own strategy. That's it. What do I mean by that? Well, just like the market, like my strategy is what you see here on the screen. If I start thinking, oh, VWAP bounce, VWAP bounce, VWAP bounce, oh, it interacted with the VWAP, it interacted with the VWAP, and all day I'm just sitting here, VWAP, 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 oh, I'm gonna act on the VWAP because I'm entertaining that thought. If the price never even got close to the VWAP, I wouldn't even be thinking about it. And that's just it. So the only difference is that the market is consistently giving you all of the information. And because you're getting all of this information, every tick, every downward move, every tick up, regardless if it's just a penny or not, gives you new information, which will then force the individual trader to just start to make decisions based off of that new information. Exactly why the casinos put that information on the screen, because they know by adding more information, it blinds the individual because it gives them more types of strategies, if you will. It starts to allow the thoughts to think differently than their strategy. And by thinking differently than your strategy, you start to act differently. And everybody knows that the only edge that you have in a random environment is the fact that you are consistent. That's your edge. And if you can't perform your strategy consistently, then you have no edge. And the reason why is because in a random environment, let's say the random environment is waving like this, right? And your consistency is going like this really fast, right? So bam, 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 while this one's going like this, right? Eventually, by consistently performing your strategy, this is my strategy. This is the market on my left hand, so you're right if you're looking at me. Eventually, by consistently moving, the randomness of the market will eventually kind of sync up with what I'm doing, and then we'll both be going like this. And at that point is when I start to reap my rewards, profitability, everything like that in between. Eventually, the market will start to slow down, maybe start to go like this a little bit. And now the market's back to doing its randomness while I'm still consistently performing my strategy. And eventually it'll it'll sync up again. And that's it. That's what the market is, or that's what consistency does. That's the consistency. That's the edge that you have. And the edge that you have by you performing it constantly like this, eventually you'll align with the randomness of the market and you'll both be in sync. And once you both come in sync, you start seeing the profits that you want to see. So I guess just keep that in mind. I know I'm not a big trader. I'm not here with like $1 billion trying to prove everybody anything. I just am video recording my journey because if you stick with me, I'm going to be a millionaire. I want to claim that status as a millionaire trader because by setting my goal as high as I am, I'm going to continue to, pursue it. And the cool thing is that this is obviously a new venture for me. And we'll see how it goes. I think, in my opinion, I'm kind of one of the first, I don't know, I haven't really seen any people on YouTube yet really record their journey from beginning stages to being profitable. It's usually kind of at the end of it where they're profitable and then they try to tell you. My whole purpose is just to show you what I'm learning throughout my process. And if anything that I'm saying resonates with you, or if you can learn something, my job's complete. That's it. Because at the end of the day, we're all just trying to get better. And it's like training a dog. You have to teach them no, right? Well, guess what? The individual is the dog, and my mind is the owner that's telling me what to do. I have to tell myself, no, you're not trading that setup because that's not your setup. You have to learn to keep yourself accountable. You have to learn to discipline yourself. And the reason why I believe so many people fail is because they don't hold themselves accountable. Like if I deviated from my strategy, what would hold me accountable is I cannot trade the next day. That's my punishment. Instead, I'll go through the motions and not place a trade. And by holding yourself accountable, you'll be able to make these differences. Because it's like what people fail to realize is once you turned 18 years old or however old you were before you went out on your own, no one ever told you that you need to parent yourself. No one ever trained you to parent yourself. Even people who had like really successful lives and stuff like that never parented themselves, which is very interesting. Like there are some who can, but at the end of the day, you're raising yourself once you become an adult. No one's going to tell you, hey, get off the TV, start working out. No one's going to come and say, hey, you shouldn't be doing that. Because everybody's dealing with their own stuff and everybody's trying to get themselves better. Some people have quit, some people haven't. So at the end of the day, it's you with yourself. And the second you can go ahead and parent yourself, the sooner you will be able to go ahead and succeed in life. And my main philosophy in life is everything is as serious as you're willing to take it. Or I guess make it. Everything is as serious as you're willing to make it. If I treat trading like a hobby, I'll yield hobby results. Well, that's it. I'm gonna go ahead and sign off. This was my little rant at the last. Hope anything I said helps. And honestly, if I can at least help one person, then this is a success. And I'm really doing this to help myself. And by helping myself, I'll be able to radiate and inspire others, hopefully. Well, goodbye, and I love you all. Good luck with everything.